Nidhi companies occupy a unique place in India's corporate ecosystem. So, unlike non-banking finance companies that deals with the public at large, Nidhi companies operate on the principle of mutual benefit, where the members contribute savings and avail loans from the same pool. Their primary objective is to promote thrift, savings habits, and financial discipline among the members. So let's understand the complete compliance framework through practical questions and answers. What is a Nidhi company? Nidhi Company is a public company incorporated under Companies Act 2013 with the objective of cultivating the habit of savings and providing financial assistance exclusively to its members. It functions on the principle of mutuality, meaning members are both contributors and beneficiaries. Under which law or Nidhi companies are regulated? You can see here section 406 of Companies Act 2013 and Nidhi Rules, Nidhi Amendment Rules and subsequent MCA notifications. They are also subject to general provisions applicable to public companies unless specifically exempted. Can any company start operating as a Nidhi immediately after incorporation? Answer is no. Newly incorporated public company cannot automatically function as a Nidhi merely by mentioning the object in its memorandum. The company must satisfy prescribed eligibility conditions and obtain recognition through the prescribed filing process. I will explain you the process. What is NDH 4 and why it is important? Because Form NDH 4 is the application used for declaration as a Nidhi company, updation of Nidhi status. So without successful processing of NDH 4, the company may face restrictions in undertaking certain corporate actions and filings. What are the initial requirements for newly incorporated Nidhi company? A newly incorporated Nidhi is expected to achieve minimum 200 members. Minimum 200 members. Net to own fund at least 20 lakh. NOF, net to own fund at least 20 lakh. Prescribed deposit to NOF ratio. Required unencumbered term deposits with the stipulated compliance period. So these conditions demonstrate operational viability and financial stability. What is net own fund? NOF is the company's own capital base available for conducting Nidhi activities. In a simple words, I can say it is broadly consists of paid up equity, free reserves, less accumulated losses, intangible assets. NOF act as a financial strength indicator for Nidhi companies. Why is the minimum NOF requirement important? The requirement of maintaining at least 20 lakh NOF ensures that the promoters have a sufficient stake and commitment in the business. It also acts as a safeguard for depositors and members. What is the significance of 1:20 NOF to deposit ratio? The ratio limits excessive deposit mobilization. This ratio limits the excessive deposit mobilization because for a very one net own fund, 1 rupee deposit cannot exceed 20. This restriction prevents over leveraging and promoters financial discipline. What are the unencumbered term deposits? Nidhi companies are required to maintain a percentage of outstanding deposits in scheduled commercial banks or post offices as unencumbered term deposit. These deposits act as a liquidity cushion and provide protection against sudden withdrawal demands. Who can become a member of this Nidhi company? Only individuals can become members. Companies who LLPs who trust and partnership firms cannot be admitted as members. The mutual benefit structure is intended exclusively for individuals. Can minors become a member? Minor cannot become a member independently. However, deposits may be accepted in the name of a minor through lawful guardian, subject to applicable laws. From whom can a Nidhi company accept deposits? Can accept deposits only from members. Acceptance of deposits from general public is strictly prohibited. This is one of the most important restrictions applicable to Nidhis. What type of deposits can be accepted? Fixed deposits, recurring deposits, subject to limits prescribed under the Nidhi rules. Tenure and interest rates must comply with the regulatory requirements. Can a Nidhi company offer any interest rate at its wants? No. Interest rates are regulated and cannot be fixed arbitrarily. Company must remain within the prescribed limits linked to prevailing banking norms. To whom can a Nidhi company provide loan? Only to members. Providing loan to non-members, violation of basic principles of Nidhi company and may attract regulatory action. What securities can be accepted for granting loans? Nidhi generally provides secured loans against gold, jewelry, fixed deposits, national saving certificates, government securities, movable property. Nature and tenure of loan vary depending on the security offered. Are there limits on loan amounts? Yes. Loan eligibility is linked to factors such as deposit base, net owned fund, security value, regulatory ceilings. So Nidhi cannot grant unlimited loans merely based on a member demand. Can a Nidhi open branches? Yes, subject to condition. Generally, Nidhi should demonstrate stable operations and profitability before expanding through branches. Objective is to ensure expansion only after establishing financial soundness. Is prior approval always required for branch opening? Not always. Certain branch openings may be permitted without prior approval within the prescribed limits, whereas expansion beyond specified threshold limits may require prior approval. Approval from RD. What activities are strictly prohibited for Nidhi companies? This is important. Cannot conduct chit fund business, cannot engage in hire purchase financing, cannot undertake leasing activities, cannot carry on insurance business, cannot advertise for public deposits, cannot lend to non-members, cannot issue preference shares, cannot issue debentures for rising funds. So these restrictions preserve the mutual benefit character of Nidhis. Can a Nidhi company advertise for deposits? No. Public solicitation of deposits is strictly prohibited. Deposit must originate only from members through permitted channel. What is NDH1, NDH2, NDH3, NDH4? NDH1 is an annual statutory return that reports compliance with key financial and membership requirements. It serves as an important compliance monitoring tool for regulators. NDH2 is generally used when a company seeks additional time or relaxation regarding compliance requirements under prescribed circumstances. NDH3 is a half-yearly return containing details relating to members' deposits, loans, and operational information. Timely filing is essential for demonstrating ongoing compliance. What happens if Nidhi company fails to comply with the rules? Monetary penalties, regulatory restrictions, additional scrutiny by MCA, difficulties in corporate filings, requirement to rectify default before obtaining approvals. So repeated violations can seriously affect the business continuity. Can non-compliance affect the future MCA filings? Yes. Regulatory non-compliance may result in restriction on filing certain statutory forms until deficiencies are corrected. So this can impact capital raising and other corporate actions. So what should promoters focus on maintain a healthy Nidhi company? Genuine member growth, strong governance practices, adequate capital base, timely regulatory filings, conservative leading process, lending policies, and continuous compliance monitoring. So long-term sustainability depends more on compliance and governance than a rapid expansion. So Nidhi Company plays a vital role in promoting savings and financial inclusion at the community level. The benefits of Nidhi structure come with significant responsibilities. Directors, professionals, and members must ensure continuous compliance with membership requirements, capital adequacy norms, deposit regulations, loan restrictions, filing obligations. So, a well governed Nidhi company can become a trusted financial institution for its members, where a non compliance can lead to severe regulatory consequence. Hope clear. We have two channels, RR Corporates, other channel RR Legal Talks. Please do subscribe, hit the bell icon so that you will not miss my latest videos. Thank you.